Hi, today I'm going to be joined by Valaise Smith, the owner of Tried and True Financial Services. And Valaise teaches small business owners the ABCs of financing, accounting, budgeting, and credit. And today we're going to focus on credit. If you're new to the channel, I'm Sherry from SherryLouMiller.com. And here on my channel, we teach the micro principles: mindset, intention, choices, action, and habit, all as a way to increase the gap between your income and your expenses. As you earn more and spend intentionally, you'll increase the gap, and as a result, increase the financial flexibility in your budget. So I'm going to let Valaise introduce herself, and we're going to get started.
Hello. Hello. Hey, Sherry.
Hey.
Hi, everybody. I'm so happy to be here with you tonight. My name is Valaise Smith, and I am the Executive Director for Tried and True Financial Services, where we help small business owners with the ABCs of finance, right? The ABCs is kind of like a little thing to help make it seem simple, right? Because a lot of times things that you're not necessarily in tune with may seem a little bit more difficult, but I want to plant that seed that it really can be as simple as hiring the help that you need to help you with the ABCs of finance. So that the ABCs stand for accounting, budgeting, and credit, building your business credit. So accounting, in the accounting space, we help business owners with income tax planning and preparation. On the budgeting side, we help business owners with cash flow management, making sure that they're budgeting for the expenses, the income and the expenses that they have. And then for the business credit, helping you build business credit so that you can get access to capital that you need as a small business owner. So at Tried and True Financial Services, again, we help small business owners with the ABCs of finance. It's something that I'm passionate about. I've been in the financial services industry for over 20 years now. It's what I do. I love it. And so I'm happy to be here to share whatever nuggets I can with the listening audience.
Okay, so let's start, because you and I both, as single parents, lived on a budget.
Oh, yeah. I live on a budget even today, and
I do too. I think that started it because I was a single parent, but I still do to this day. I still have a budget. I track all my spending. So we were talking earlier.
Yeah, I was just going to say, so the key thing here is that one of the things I want to echo is that budgeting is not a one-time event. It's a lifestyle.
It's a lifestyle.
Do ongoing over and over again.
It is. It's just something, and really, not to get too much, because I do want to spend most of the time on credit, but like with my budgeting, it's a little more challenging now as self-employed because my income's irregular, so I have to monitor it more than I used to. But when I was in corporate America, it was every 2 weeks, and I had it down to, I didn't spend that much time because I did it all the time. I could just pop in, do what I needed to do in the spreadsheet, do my bills, and then I was on with my life. It wasn't like I'm spending hours at a time on my budget. Yeah. But I project or forecast for the whole 52 weeks. So most people, if they're following my channel, like my budget, when I set it up in January, I schedule it out for the entire 52 weeks. Anything that's fixed, I just put on there, and then I plug the variables with the estimate, and I only have to change them when I actually pay it. And that's how I've done all along. It just works so much better. Because then,
that's a simplified way to do it. It's a real simplified way to do it. And that ties into the thing for Tried and True, the ABCs, is just make it simple,
And what works for you. That's what people have to realize, like I say all the time, it's not a one size fit all, because everybody's finances aren't the same. And I know one time when we were working together, you said you got paid once a month. And I still to this day can't wrap my head around being paid once a month. And you told me you preferred it, which was even more
because from a budgeting standpoint, a lot of times we use budgeting templates, and they're monthly. We project our expenses on a monthly basis. So if you get paid monthly and you have to be disciplined. And that's what
extremely, I think.
We're going to talk a lot about discipline today, right? Because you do have to be disciplined, and that's where creating budgets and building your business credit, it all requires discipline. Like you can't just be willy-nilly with your spending or with your income. You have the whole purpose of it is to create a plan. It's the plan.
And I agree. And that's what I was saying, like the overlap, because typically I normally talk personal finance, but there's still some overlap with business finance. It's like you said, you still need a plan, you still need to know your numbers, and you still need to track your spending, because it's just a matter of your inflows and outflows, whether it's personal or business.
Absolutely.
I mean, once you go over to the credit side, I'm gonna let you explain the differences, but I think once you get on that side of it, there's a difference between the two. But on the other side, because even as self-employed now full time, I still have to track my spending, as like my business expenditures. I'm like, okay, I need to do this for my business, but I need to know how much money's coming in. It's not too much different than on the personal side.
Absolutely. I agree with that 100%.
So do you start there? Go ahead.
Yeah. So when I was talking, we were talking a little bit before, and we were talking about credit, and there are some differences. There are some similarities, of course, right? But there are some differences with personal credit versus business credit. My focus is on business credit, but one of the things that's different with business credit that's not the same as personal credit. Like with personal credit, we know that there's this like pie. I always visualize this pie chart with like these 5 different variables that go into your credit score, right? You have your utilization, you have inquiries, you have length of time of credit, you have your payment history, and there's one other one that I'm leaving out. I think it's 5 of them.
It is 5, but I can't think either, because when you were saying them, it is. And they all have different weight. They're not weighed the same.
Right.
Yeah.
And so business credit, you don't have to worry about inquiries. You don't have to worry about the length of time that you've had your credit. Okay. It's really all about your payment history. Once you start establishing your business credit, you establish your business credit, you use it and you pay it. You use it and you pay it. And as you're using it and paying on those trade lines, and we'll talk a little bit more about that, but once you start receiving those trade lines, paying those trade lines, then you can move to the next tier of lines of credit, and then you can start getting other types of loans in your business name, and it has nothing to do with your personal credit. Of course, if you have excellent personal credit, if you have good personal credit, you can use your personal credit as a personal guarantor. But the whole point of building business credit is to separate yourself from your business, to separate your business from your personal, life. And so that you can create the level of liability protection that you need as a business owner. And so while you can use your personal guarantee, it's not required. You can start building business credit with bad personal credit, really.
Well, let's start there. So we'll back up a little bit. It's separating, because you and I talked about that the other day too, because currently I'm pretty sure your business is separate, because you're LLC, mine is still, I'm doing a Schedule C. So mine is still combined. Everything's just under my name, because I didn't want to do a DBA at first. And because when I had, back in the 90s, when I had the vending, I had a DBA and everything was separate. But this time I was like, okay, I'm just going to run everything through my name until I kind of figure out where I'm going to land. Because I didn't really know exactly what my final destination was going to be with the business, because I started out as finance, and then the digital products took off and I was kind of pivoting over. So I didn't want to pigeonhole myself into something. And so now that I have more of a focus of where I'm going, first the year, I'm going to separate them. I'm just going to finish this tax year out, because we're almost in October. So I'm just going to finish it out and do everything under Schedule C again. So let's start there. Like when you separate, the different type of entities, you have an LLC, which I think most people seem to do now. Then you need your EIN, just go through the basics.
Yeah, and if I could just make one point of clarity, even with an LLC, that flow, and if you had your business scheduled with the EIN number and separate bank account, as an LLC, that's still a pass-through company. So it flows through on a Schedule C and
Okay.
attaches to your 1040, even with a EIN number. It's not until
Okay.
you get into like you get into other business structures like partnerships, which require a K-1 and 1065 reporting, or S Corp or C Corp, those types of things. But then ultimately, when you get that K-1, then that's going to flow over to your 1040 as well. So again, it just really depends on your business structure, but whatever your business is, I highly recommend everybody start with, whether you start with the DBA or apply for LLC, that you apply for an EIN. All of applying for the EIN is free. You get your EIN once you have your articles of incorporation or whatever your business structure is. You take that to your local bank and you establish, or credit union or whatever financial institution you've chosen to work with. You take it there and you open up a business bank account. And then from that point on, you're set up to separate yourself from the business. All of your cash flow and your expenses, your income and your expenses can flow through your business bank account, thereby creating that separation, because an LLC in and of itself is to create some level of limited liability. And as long as you're tracking it properly, if you were ever audited or, God forbid, sued, then they will see that everything is separate, and then you will create that level of protection for your personal assets, where they wouldn't be able to come after your personal assets because everything is separated as opposed to commingled. So from a building, you had a comment?
Oh, I was gonna say, so at that point you have your, you set it up, you've gotten your bank account. So let's say you don't have business credit yet. Are you still able, since you're LLC, to use the personal credit, or is that not advisable?
It's not advisable because, again, you want to create that separation from the very beginning. So it's not advisable. You can do it as long as you can still, even if you did do it and you had just one card that was earmarked that you're using for all of your business expenses.
That's what I was gonna say, yeah.
Then at least it creates some level of separation, but it doesn't give you the protection that you need, because everything is flowing through your personal name. They still could come after you, as a person and your personal assets. Whereas if it's done in, everything is done in the business name, it creates that separation.
So I know the other day, so if you're that new, you've just started everything up, your bank account and everything, how challenging, like on a scale from 1 to 10, is it to start getting credit at that point? Because with personal credit, it's a little challenging if you got bad credit, no credit to get established. And you said it's not as challenging on the business side.
Yeah, because on the business side, you're starting out with net 30 accounts, net 60, net 90 accounts. And so that's basically where you go to certain vendors like Quill, Uline, Grainger, Home Depot, places like that, where you need to order supplies for your business. And you're just going to ask them for a net 30 account, for instance. And so that's not necessarily like a credit card, but you're just asking them, can you send me these supplies and then invoice me and I'll pay it back within 30 days.
30 days.
And so once you start establishing those net 30 accounts, you get a couple of those, you get 3 or 4 of those, you use them, you pay them, you make sure that you are set up properly with the business credit reporting entities. And the main 3 business credit reporting entities are Dun & Bradstreet, Experian, and Equifax. So you want to make sure that you apply for a DMB number. It's free. It's Experian IntelliScore number. It's free. And then get your Equifax number. It's free as well. And so once you make sure that you have those accounts set up, and then you start applying for these trade lines, the net 30.
So for people who don't know because I know what you mean by trade lines, but for people who don't know the jargon language, do you want to explain exactly what a trade line is?
Yeah, the net 30 accounts. Those are the net 30 accounts. Those are the basically the accounts that you're getting these lines of credit
accounts, your liability. Okay. Yeah, like I kind of know, but for people who are not kind of deep in the weeds and on credit, may not know the jargon, because I don't think that's what I used to refer to them as. And somebody used the terminology one time and I was like, Googling it, like, what is that? So a few years ago. But so step by step, so you would go, you choose whatever type of form of business you're going to do. We'll just stick with LLC. And then you do all the documentation. You go to the bank, you open up your bank account, and then you start to do the credit. But before you start to apply for the next net 30, do you get all the numbers with the reporting agencies first?
Yes, I would recommend that you get all of those first. And
Okay.
again, yeah, and if I can just take a step back, the foundation of your business is very important. Like, you want to make sure that you have a business address. You want to make sure that you have a business telephone number. You want to make sure that you have a business email account, and preferably a website. So those are some of the foundational things that you want to make sure that you have, because when you start going and applying for the trade lines or these net 30 accounts, these are the types of things they're going to look at. They want to make sure that you're set up as a reputable business, not
That's
just.
why I have a PO box that literally I just go over there and clean out the junk mail. But because if you have a website, especially if you're building an email list, you have to put an address on there. And I did not want my personal residence at the bottom of an email. So, I would probably use that same address. So if you don't use your home address and you're not in a brick and mortar, is that what people are using, like the PO boxes that look like street addresses?
No, that's not going to work. You can't use a PO box, and you can't use like a USPS address. What you want to do is get a virtual address with an office building like Regis or something like that.
Okay, so all of these links, and let me start making notes because you're throwing out a lot of. So I'm going to email you. You can provide the links, and then when I post the video, we'll put them in the description. So we need the PO boxes, and then the credit reporting. Well, not the PO box. Yeah, the virtual. Yeah, the virtual address, and then we need the credit reportings at the 3. I don't think you said anything else, but I'm just going to keep a note of the links that I have to post, because otherwise, like I said, fighting off a headache today, so I'm a little forgetful when I'm like that.
That's okay. We can also, you can just jot down that we can put the link to the IRS website to apply for the EIN, which is also free.
Yeah. Okay. Okay. So where do you think, so you have your net 30 and you're starting to build, like, how long do you stay at that level? And do they determine, does the vendor determine whether it's 30, 60, or 90, or is that something that the individual?
Yeah, they determine it. When you reach out to them, it's certain ones that have net 30 terms, net 60 terms, net 90 terms, and they usually report within 30 to 60 days after the first payment has been made.
So where, for personal credit is whatever annualcreditreport.com or something to that effect. So do you pull your credit report on the same type of site, or is it a separate site for a business?
It's a separate site for a business, and that's another link that we can provide. Well, it's nav.com, NAV, Nancy Adam Victor, NAV.com.
And so is it just, that's where you can pull your business credit reports? It's just the one site, or are there multiples?
That's the only one that I'm aware of. That's the one that I use. That's the one that I recommend. That's the one that I prefer.
Okay, because like I said, with personal, I'm trying to make the distinctions, because with personal, there's so many sites between Credit Karma, Credit Sesame, like all these different places you can go to get the information. So in the business, it seems like it's a little bit more limited to just a few resources.
Right.
So what do you think is next? Because I know the other day we were talking about, which I definitely want to cover, how people really just don't want to use credit. And it's not a bad thing to use credit to leverage, because you don't, like you said, you don't want to start using your personal, you want to limit the amount of use of personal funds to support your business. At some point, it has to fly on its own. In the beginning, I think you might have to put some cash into it, depending on what type of business you're doing. Mine is online, so it's a little bit, doesn't require as much cash as if I had something like with physical products or something like that. But at some point it does, and that it's not a bad thing to leverage credit to build your
Absolutely.
business.
That's one of my favorite words. I love the word leverage because leverage really gives you,
Like
it
get a
gives you that
t-shirt,
boost.
leverage your credit.
Yeah, it gives you that boost. It moves you up and it makes you go higher. It moves you along in the process a little bit faster than you maybe would be able to on your own, right? So that's really the concept of leverage. I really like leverage for that reason. And the thing about it is that when you're building your business credit, it's really best to do it that way because again, one of the main differences between personal credit and business credit is that utilization piece. Whereas you may be able to use your personal credit, but you may be forced to run your credit lines up or your line of credit up higher than you would necessarily want to, which is going to have a negative impact on your personal credit because your utilization is high. That's not a thing with business credit. Once you start getting a business line of credit, you max it out. A utilization doesn't go into the factoring of your credit score. It's really more than anything, just your payment history.
So it's not a pie structure at all. Like, so they're not multiple components. It's just primarily repayment history.
Your payment history, yeah.
Well, that's a good thing. Because it's right. Like in this time, when I did a personal credit video, that's one of the things we were talking about. Since March 2020, some people have had to rely on credit, which means your credit score tanks because it's there to be used. But if you use it, they penalize you basically, which is crazy. But I mean, I get the whole thing. You don't want to be overextended, but it is what it is. Like you gave a 5,000 credit limit, but if I use the 5,000 credit limit, they're going to penalize me for that.
Yeah.
Yeah. So, I mean, it's good to know on the business side, especially somebody who's just getting going and you have to buy cost of goods sold or things like that, that have to tide you over, especially in your business, if there's a lag. Like my cousin, he's on the East Coast. When he was a landscaper, he got a contract with a municipality. He's in Wilmington, Delaware, which was a good thing for a small independent landscaper to be able to land a contract with the city. But he didn't realize after dealing with residential customers and you cut the grass, they pay you. Where with a municipality, there's layers of red tape before you're going to get paid. I mean, it could be a month, it could be like, it's not going to be overnight. And I had told him, I was like, you're going to probably have to take a loan, like to bridge the gap for payroll if you're having cash flow issues, because he didn't anticipate the delay in payment. And I said, you're dealing with a governmental agency, like somebody has to approve it, they have to submit it, it has to go through, like there are layers in the process.
Yeah.
So people may have businesses like that to realize, like, if you're in a situation like that, and you have credit available to you, like it shouldn't be so taboo to use it, because once you get the receipts in, we'll just stick with him. Once they, the city of Wilmington paid you, then just pay the loan off. But like you said, it comes back to being disciplined. You have to be disciplined enough that once you get your receipts in, to pay the bills down. Like, don't just leave them out there. Like we do on personal credit, like the little minimum payments, like, you have to keep yourself. And to me, if you're an entrepreneur or a business owner, that requires a certain level of discipline in and of itself.
Yeah, and you just said something that made me think of an important point that I want to make sure that I share, is that another difference between personal credit and business credit is that with your personal credit, right, only you can see your credit history unless you give someone permission or authorization to go and view your credit report. With business credit, it's open book, right? So anybody can go and see what your business credit score is. It's not as private or protected as your personal credit score is.
So because obviously they wouldn't have, like you said, like an average person, like I could just go look you up by your business name and see your business history credit.
Yeah.
Yeah, I don't know. I'm comfortable with that, but it is what it is. I mean,
And
That's
so you want to be
interesting.
careful with that and make sure that you're paying, because as you're out doing business, like your business credit profile is going to be representation of your business and how you're running your business. And so once you start building your business credit, you definitely want to make sure that you're applying that discipline and you're doing the right thing and that you're keeping up with paying your bills on time. Because
So
that
do
will.
they score it similar to the FICO scores? I mean, is it similar to that?
Some of them are. I think with Equifax, it's more similar to personal, but with Dun and Bradstreet for sure, as well as Experian, their scores go up to 100. So anything 75 and above is good. Anything between 50 and 75 is kind of like average. And then anything below 50 is not good. So anything below 50 is saying you're not paying your bills on time. 50 to 75 is saying that you pay on time sometimes.
Sometimes you got some slow pays.
And then 75 and above is saying that you're paying, ahead of time or on time.
So how is like, because on the, you said something that triggered, do they actually show, like if you pull your personal credit and it shows you have slow pays, like you went 30 days or you went 60 days, do they actually show the aging of the debt on the?
Yes, it will. It will. It's not, the credit reports are not as detailed, so you may not see what the vendor is or who reported the slow pay, but you will see, the number of days kind of behind.
Oh, okay, so it just kind of a summary of your overall payment history.
Yep. Yes.
Okay. So what else? Because I don't have business credit, like I said, because mine isn't separate. So this is all interesting to me. But I think my questions are going to be triggered by what you say.
Yeah.
So is there something else that you think in general, like, especially for a new startup? Because one thing when you're starting a business, it's so many moving parts. If you started separate from your personal, like if you're actually going to separate your business from your personal assets, it's a lot of moving parts to do that. So is it anything that we haven't really touched on that you think maybe a new entrepreneur, even if they're online, because I bet statistically not as many online marketers, especially this last year, so many have popped up, that they're actually separate from personal. Yeah.
Okay. Yeah. I mean, one of the key things that I've learned along the way is get help. Don't try to do everything yourself. And even if you may not be in a position where you can hire a part-time or a full-time employee, contract that work out. So hire, a freelance contractor to help you with certain areas or certain aspects of your business. Invest in yourself is a big thing, where a lot of times we're always looking for free, but I am of the mindset of you get what you pay for. And so you have to invest in yourself, invest in your business, and all of that should be taken into consideration when you launch the business, right? As far as your startup costs and things like that, because you have to continue to stay in the know, stay abreast as to what's going on in and around you in order to take your business to the next level. That's why I just love the term leverage, because leverage can mean so many different things in different veins, but ultimately it means just you doing what you need to do, using other people's money over right, to take you to the next level. And even if you do have to get grants or loans or whatever, hook up with the SBA, hook up with SCORE. They have a lot of resources available for small business owners, and especially with the pandemic that we find ourselves in. Small business, a lot of people don't realize, but small business is really defined as an entity with 500 or fewer employees. 500, that's a lot.
It's a lot. And it's like we talked about the other day, like small businesses contribute a lot to the economy.
Absolutely.
They do. And when I didn't do it this time because, like I said, the business structure was different. But when I had my vending business in the 90s, I went through SCORE, like their free workshops, all of that type of stuff, because one of the things when you're starting out, depending on what type of business, you don't know what you don't know. And some mistakes can be costly. You know, because with the vending, I made a conscious decision because there's a huge profit margin on coffee. Because coffee is really cheap to make, but you know, you can charge. But to sell unpackaged is a huge liability too, that I didn't want to deal with, because packaged foods is different. But when you start dealing in being a hot dog vendor and anything like that, where you're preparing the food, it opens you up to different levels of liability. Because for mine, the only thing I had to do, I was in 2 different counties, Wayne and Oakland. I had to take like literally, I think it was an hour. This little go watch a video to get my health license. And that was it. But if I had decided to do, you know, coffee or hot dogs or anything like that, it was a whole nother level. And I was just starting out. Like I said, I didn't want to be exposed to the liability either. Because if someone gets sick, the first thing they're going to do, they're going to sue everybody. So you had, like, I think there are different things. You have to look at the structure of your business, what you're selling, who the end consumer is, and you know, what type of exposure you're opening yourself up to. Like in the online space, like I said, it's a little different than when you're dealing in physical products.
Yeah.
Or not, you know, and even not just online, if you're providing a service. Because even taxes, I mean, you know, you mentioned you do taxes, that's a different level of liability too, because if someone gets audited, you know, they're coming like they didn't do their taxes, so they're going to refer the IRS to you.
Yeah, they are. And this is one thing I try to educate my clients on, that as tax professionals, we have a certain level of liability. Yes, we do. And we should be carrying E&O insurance, right? For that purpose as well. However, at the end of the day, your tax filing is your tax.
Because you sign off on it.
As an individual or as a business owner, this is your information, this is your number. So even if and when you hire someone else to prepare your taxes, you really should take the advice that they're giving you. You actually should take the time to sit down with them and allow them to explain the numbers, even though, you know, a lot of people, you know, tax is not the sexiest thing to talk about. People don't want to file taxes. They don't want to pay their taxes. They don't even want to talk about taxes, right? But it's a fact of life. We can't get away with ignoring our taxes.
You sure can. And it's amazing to me that people will sign off, because I've known people personally where the spouse did everything, but I told them, but you signed it. Like, how could you, once you put your signature on it, the IRS
you will be
doesn't care. Yeah, they don't care that you didn't really look at it, that you took, you know. And the same thing, like I've seen various celebrities that left their finances to an accountant, and then, you know, the accountant didn't do, I won't name one celebrity by name, but like the accountant didn't file for years. When they found it, they said that the check was still attached to the return. And I'm thinking, well, that means you're not even balancing your checkbook. Like, how did you not know the check hadn't cleared? You know, I can't remember because it's been a few years ago with the story, but it was at least maybe it was a few tax years. I couldn't wrap my head around, because the level that this celebrity is at, like, I'm sure the check was pretty large. You didn't see the check didn't clear. So I agree with you, like, people, just because you hire someone, even if it's not an accountant, whenever you hire someone, like you're ultimately responsible. It's your business, it's your money. You know, even if you have somebody doing your bookkeeping, you still need to monitor your numbers, your inflows and outflows. That's how people can start embezzling from you, because you don't have a clue where you are.
And I tell my clients all the time, I get it. This is not your interest. This is not your lane. But even if you don't understand, just listen. Let me explain it to you. And over time, it'll start clicking, and you'll start getting it, at least know enough to be dangerous, know enough to at least have an understanding. You may not be educated enough to actually do the preparation, or do, whether it's your taxes or your bookkeeping to produce your financials or whatever, but still just listen, don't block it out.
Well,
Don't
know
block it out.
enough to
You'll be
recognize if
surprised.
something doesn't look right. Like just to know enough to like raise a red flag, like, because when people are, I am definitely not, you know, an expert on everything, or maybe not anything, I don't know, but but when somebody's telling me something, I go, that doesn't make sense logically. Like, you know, if it doesn't connect the dots, I'm not comfortable. So to me, I agree with what you're saying. You may not be an expert on your finances, but you need to know enough to raise your hand and say, like, you're gonna have to break that down for me. Yeah, like explain it further. And I think a lot of people don't like to see that, they don't like to let people know that they don't understand. So they just kind of nod, yeah, when they really don't understand. And then you walk out of there thinking, I don't know what he was talking about. But when it comes to your money or anything that's really important to you,
you should try.
At least, yeah, you should at least try to know the basics.
Yes.
So I agree.
And like you said earlier, you don't know what you don't know, but just, you know, have enough, you know, to say, I don't understand that. Can you explain further? You know, that's one of the things that I do have up on my website is a freebie, and it is the 5 questions that you should ask your CPA or tax professional, because I recognize and I know that people don't know what they don't know.
So what are those 5 things? Do you know them off heart? No.
I do not, but I would recommend that you go to my website, or anyone can go over to my website. The website is, I do know, www.triedandtruefs.com. Tried and True, like financial services, triedandtruefs.com.
And I am going to put all of your links. So are you primarily on Instagram? Because I know you did have a Facebook too, but I don't see that.
Yeah, I do still have the business Facebook, and I am on Instagram as well as LinkedIn.
Okay. You're kind of breaking up a little bit.
Okay, yeah.
Okay.
I was just saying that I do still have the business Facebook page. I'm on LinkedIn, and I'm on Instagram. In addition to the website, I have information out there on the website as well.
So I think probably based looking at,
is it still lagging?
It's a little lag. So let's see. Yeah, it's a little lag. So we'll maybe wrap it up, because it was fine before. But I think, but just even looking at the notes I've taken and what we talked about the other day, I think we probably, because you can't tell everybody everything. I mean, but I think we've touched on most important points. So is it something you want to wrap up in summary, like for a new business owner, like top 3 or anything like that? If not, it's not a big deal.
Yeah, I mean, like I said, I think the top 3 things is to make sure that you have your business structure set up from the very beginning, and make sure that you have everything separated to create that flow of income. And it's easier to manage that way, to make sure that you are set up to where you can pay yourself, you know, and create that separation between your personal and your business expenses.
Now, we didn't really touch on that. We didn't really touch on paying yourself, but finish yours and we'll circle back. So finish, so that you can pay yourself.
Yeah, so that you can pay yourself. And then I was just saying, and just make sure that your business structure is solid, like that you have, that is set up as a reputable business. Like you have your business name, you have your business structure, you have your business address, you have your business email address, you know, you have your virtual address and your email address, you have your business telephone number, and then you can start building business credit from there. And it's like a 7-step process with building your business credit, where you start out with the foundational things that I just named, and then you start out with the tier 1, kind of like trade lines or net 30 accounts, and then you start off with a small segment of those, and then you use them and pay them, use them and pay them, and then you start applying for more. you start applying for more trade lines. And then eventually you get to the point where you can start applying for lines of credit. You can get vehicles in your name if you need that, other types of machinery in your business name.
Yeah, because I do know a few people who have bought their cars in their business name so that they can write it off.
Yeah, it
That's
has to be ordinary, necessary from a tax standpoint. You know, I see and I hear all of these people out on the social media today, and they're positioning like anybody can just go out and get a car in their business name as long as they put it in their business name. It's a business write-off, and that's not the whole truth. The truth of the matter is that in order for you to have a business name, a vehicle in your business name and write it off, it has to be ordinary and necessary for your business.
For your business. Yeah, I know, like, you know, that's why I said it's probably like going kind of in the weeds, like that's probably a level 2 conversation. But we didn't, when you said pay yourself first, even though we talked about that the other day, I didn't put it on this bullet points to cover, because that is the thing. So if you're 100% self-employed, like the different type of, is it, because I don't keep up with that anymore. I have a Roth, but I know there are other type of retirement plans, I think like defined benefits that allow you to contribute more if you're self-employed, because a Roth is going to cap you out every year.
Yeah, the self-employed plan or the self-employed plan, right? Sorry about that.
That's okay.
I put my do not disturb, and these calls are still coming in anyway. But yeah, the self-employed plan is another plan where you can contribute a large amount for yourself and any employees that you have, and that's a tax write-off as well. So again, yeah, there are a lot of moving parts, and with the ABCs and the services that I offer, there are a lot of intermingling or overlapping with that. But from a business budgeting standpoint, you just want to make sure that you have your categories where you have your operating expenses, you have your amount that you're putting aside for your taxes, so that you can pay your estimated taxes. You want to make sure that
quarterly.
Yes. Because it's no fun writing a big check at the end of the year on all of this money, because we're in business to make money, right? We don't want to keep being in business every year and then you're reporting a loss on your business. Too many losses, and then IRS is going to be looking at you like, is this a business or a hobby? Like, how are you living? Like, you can't keep reporting losses. So ultimately, you're going to be making a profit, which you're in the business to make a profit, in pursuit of a profit. And on that profit, you're going to have to pay taxes.
You got to pay taxes. I mean, there are more things to write off than personally, but like you said, like it's still a business, and to keep yourself like just ahead of the game, just do your quarterly estimates.
Yes.
You know, and I think the IRS, on IRS Gov, don't they have that? Because I know they do for the personal side. And I thought, like mine's, I have software, so I got my estimates from a different route. But does the IRS, do they have a calculator for your estimates on the business side?
They do, but after your first year, it's based on the income that you report. They're going to estimate your taxes going forward on the income that you reported.
So let's put some disclaimers. This is all for illustrative purposes only. Your situation may vary. Because we're throwing a lot of financial stuff out here, and this is just like for illustrative purposes. But go ahead.
Yes, and so yeah, your taxes are going to be estimated based on the income that you reported in the previous year. So like you said, with software, it's going to spit out your estimated taxes, and it's going to be based on the income that you reported. But in your first year, right, when you don't know what or the system didn't have anything to base it off of, then you're going to have to pay that amount, all up front. But basically, from a budgeting or planning perspective, I recommend for my clients, especially in their first year, to put aside at least 20% of every check that you get, and you should set up a separate account for taxes. So when you go and you open up your bank account, really you should open up at a minimum, you should open up three accounts.
So break
Right.
it down, one for your taxes, one for,
Operating expenses and one for paying yourself.
okay. Well, that was good. Like,
Yeah.
I can't really think of anything else to ask you, but like the last thing, like the pay yourself, I think people have to realize that, you know, almost treat it as if you, well, even though you own the company, as whatever frequency, weekly, monthly, whatever frequency that you want to use, to just get yourself in the habit of that. And like you said, because when I first moved back home from Georgia, most people don't do city taxes anymore. So my employer refused to withhold Detroit. You figure they were already going to have to add the state of Michigan. And they were like, no.
Too much of an administrative burden.
Yeah, it was too much of an inconvenience.
To do with us.
Right, and it's like I said, because you know, a lot of municipalities don't have city taxes. I don't know how many are left, but Detroit did. And so, like you said, I had to set up a separate account to start just putting the money aside for my city taxes, because I lived in the city, even though I didn't work there, I lived in the city, so I had to pay taxes.
Yeah.
So it is, because if you don't, the huge expenses will kill you. Then if you just, what is it? You eat an elephant one bite at a time. If you just do it like a little bit at a time, it's not as taxing on you.
Absolutely.
Sometimes as new business owners, especially if the cash flow is very irregular or sporadic, it's harder to do, but we are keep coming back to, you know, the discipline. Like you almost, you have to treat it like it's a business and run it like it's a business. And even when I first started, like it is like, it's a mindset, like, especially when you come off corporate, when everything is done for you, you just take the check home, but everything else is done for you. So it is a mental shift when, if you go, even if you're doing a side hustle, but if you go out on your own 100%, everything's on you now. All the things that you took for granted before are on you.
Yep. Yes. All the things you took for granted. Typically, I say that if you're going to, because like I'm a corporatepreneur, so I still work full time and I run my business on the side. And so there's kind of a sweet spot with that, because there's some things that as a full-time entrepreneur, I don't have to be as worried about, because it's kind of a done for you type of thing. But definitely as a full-time entrepreneur, I say that for me, what would be comfortable for me is if and when I decide to go out on my own 100% of the time, I would need to be making at least 2 to 2.5 times as much as I'm making, you know, in corporate, to maintain the same standard of lifestyle. Because you have taxes, 100% of the taxes, you have your own insurance that you have to purchase, you have your own retirement funding with no matching that you have to fund. There's a lot of additional expenses as a full-time entrepreneur that you have to take into consideration. A lot of time people are making this money and they see, you know, this large influx of money coming in and they start spending and not taking care of making sure that you have all of your ducks in a row with the business, and then you pay yourself. You know what I'm saying? However, you know, one of my favorite books that I do, I really appreciated, was Profit First by Mike McCallum. I don't know if you
I have Profit First and the Pumpkin Patch. Actually, I have his other one too, the toilet paper or something.
Yeah.
I can't remember how to pronounce his last name.
Yeah. And so he talks about taking your profit first. So whatever, you know, whatever way you decide to do it, it still should be a defined amount, like 50%, not 100%. You're not just taking all of the money that you make and doing whatever you want to do. You need to, like I said, set up these accounts and make sure that you're allocating the money into these different segments of your business so that you can continue to operate.
And it's not even just operating. I think probably a fourth account too, because as you want to, like you said, invest in yourself and other things, you also are going to have to need money to reinvest into the business, which isn't like really your standard operating, but you will need to either, you know, classes, training, like you said, you got to keep yourself up to date. Yes. And I wouldn't really classify that as a typical operating expense. So you might even need a fourth account to just allocate money to
For
reinvest in.
development.
Right.
Yep.
So, because when I first started out, I went to a few seminars, you know, one for networking purposes, but two is to get more familiar with the space I was entering. So it's a lot, like, you know, it seems glamorous, I think, a lot of times to want to own your business. For me, it was a no-brainer because that's just what I've always wanted to do. Like, but it is not, I think, but what is it, the faint of heart, it's not for everyone. It's definitely like being your own boss is not for everyone. I mean, the time freedom is definitely a plus, you know. Can I get an amen? Yes, I will testify, but that, I mean, but there's a trade-off for that too, that people have to realize. Like, you know, you are in control of your own time, but you're responsible for a whole lot more too. And it depends, it's an individual thing. So only you know if you're cut out to be an entrepreneur. Because I have friends, like you're probably one of the few that is, I have a few friends now that are getting to the space, but for the most part, none of my friends ever wanted to work for themselves. No desire at all. And I was just the opposite. I never wanted to work for someone else. But they were content with retiring from corporate America, and I just could not see it. I'm like, no.
No.
I will not do that. But we'll wrap up here. So we're going to post your information. You'll have to send me your LinkedIn. So I'll do the Instagram, LinkedIn. If you want Facebook, we have quite a few resources to post. And then I know you said something about the 7 steps. If that's on your website, then I'll direct people to that too. Because it was a lot more information as we got to talking, you know, like, you know, the fine print type things that I wasn't aware of either.
Yeah, well, I'm happy to share. I'm glad I was able to share with you and your audience tonight. So I look forward to reconnecting and talking to you even more in the future about.
Yeah, we're probably gonna have to bring you back for a part 2. And I'm glad that I narrowed it down to not the ABCs, to just the C. And maybe next time we'll break it down, like, you know, the county act, because we commingled quite a bit, but maybe segment it out a little bit, do the A, then the B, we've already done the C. And because we're coming up, we'll be at year end in a minute, and people will have to start getting ready for their taxes. And that was one of the reasons I kind of went the 4th quarter, because you do even have to prepare for the year coming to an end and setting up your budget for next year if you do it that way. All right, well, I'm going to shut it down. Hold on just a second. Well, that was a very informative conversation between me and my friend Valaise. I learned a lot, and I hope you did too. I'm definitely going to have to bring her back to cover the A and B of A, B, and C's, which is the accounting and budgeting. Because although today we were commingling some of the information, I think there was a lot left to be discussed, but I hope that gave you a foundation to move forward with establishing credit for your business and in your business name, and separating yourself from your business financially. So if you haven't, don't forget to give the video a thumbs up, because I think Valaise dropped quite a few nuggets today. Subscribe to the channel if you haven't. Hit the notification bell so that you're notified the next time I record a video, and I'll see you next week. Have a good one.